Right. So everyone, hi everyone. So this is the introduction part of the business studies. Business activity and influence on business organization. So this session is really important because every businessman, every business student must learn this basic concept of when you are starting a business. Right. We're starting with what is business activity lesson. So this general revision are going to cover the basic foundation type model of the business studies, business and the business organizations and the business objective, business classification, everything from the beginning. So business activity, we talk about anything which satisfy human needs and wants. We call a business activity. Business activity. When you're starting a business, we need to have resources like land, labor, capital, and entrepreneurship. So mainly business organization, business activity. We can. There are certain business activities are going on. We're talking again like it can be a goods providing organization or service providing organization. There are certain business activities are there. So the term business we can define as an organization that produces goods and services. Organization that produce goods and services. So they need certain resources also. And this chart actually shows the difference between goods and services. Goods are normally tangible, services are intangibles, right? So goods we can perishable, services are non-perishable, goods are durable, services are non-durable, like that. So main objective of business anyway to satisfy people's needs and wants. Therefore, really important. The needs are basic requirement that must satisfy. Even the beggars, they can by begging they are satisfying their needs, like they're asking food and they're asking money and everything. We talk about the goods are normally the wants are infinite and therefore, but the resources available is finite or limited. Therefore, we have to make some decision, that is you are doing in economics, how to make economic decisions when you are choosing a right decision between the infinite wants and the finite resources, right? So we talk about different purpose of different business activities. Like private businesses, they are mainly profit-centered business. Social enterprises like Lions Club, it can be like non-profitable, like clubs and societies. Human and social welfare, environmental welfare is the main objective. Public enterprises means the business owned by the government. There are three categories. You can see ownership, private ownership, and social enterprises. The objective is mainly social, environmental welfare. And public enterprise means the government-owned business organization, like that also they are doing with the purpose of public welfare. Right. So we talk about this case studies and everything. So today, this session, I'm not going to talk about the case studies. I'm going to talk about straight theories, which comes from the like a first term of the business studies. So you can see the stakeholders we talk about. In the stakeholder mapping, we talk about mainly there are different types of stakeholder. Stakeholder definition is there. In some past papers, we can see the defined questions. The stakeholder definition is there, like individual or group with an interest in the operation of a business. So there are certain stakeholders, primary and secondary, or internal and external stakeholders. Internal stakeholders mean the one who within the business, like owner, like employees, like managers. And external stakeholders are normally customer, we can say financials, like bankers, suppliers, local community, government, customers. So these are external stakeholders. What are these stakeholders and what is their main objectives also. Right. So the stakeholder concept is like that, and then we're going to our next chapter, right? The business objectives. In the business objectives, again, like AFO said, like I mentioned, like business objectives are varied. Like some business objectives they want to survive. Some people want to like maximize their sales. Some people want to maximize the profit, or sometimes market share, or sometimes financial security, something like that. And some people they have non-financial objectives such as social objective, personal satisfaction, challenge, independence, control, like this. So therefore, you should know mainly what are the objectives of a business organizations in different objectives. So we can categorize the objectives as financial and non-financial, like the two methods of objectives. We have important objective. If you have a clear objective, it's always helps the owners to focus, and also it gives some kind of a motivation for the workers and provide some guideline for the managers. Easy to assess the performance. Like these things, like objectives are important because of these reasons. So main financial objectives is survival. Some of them actually you might not agree with this, but survival is a financial objective. For example, like this kind of a situation in a pandemic time in the world, they normally want to survive their business. Survivals mean like keep going without failing. Therefore, financially must be able to find out the enough revenue to cover your expenses. That is called the survival level. Right. So survival is really important as a first financial objective. And the next part we talk about the profit. So profit, actually we can say there are different, if you can earn extra revenue, then of course that is called the profit. Some people want to maximize this. Some people want to have a satisfied like a small profit. So some people that is big profit. Some people want more small profit. So like there are two parties are there. And like the profit can be given to the shareholders as dividends. If a sole trader partner, it's like a profit share entire. Sales is another thing. Sales maximization, market share maximization is number of customers you want to increase. Financial security means you want to actually like profit satisfying situation, like you want to have some kind of a like a cover your bread and butter, like you have want to just satisfy and without having any debt. You want to be like relax and you want to be stay cool, and business want to have financial independence and security, that stable level, right? Another non-financial objectives, like this time like all like past papers mock exam, this ask in non-financial, what are the non-financial objectives that this person can have or this business can have. So in that case you have to apply to the case study. So whatever, so you can't just mention these theories or whatever the case study you have to apply. Always the state questions, outline questions, and analyze question, even like 9 mark or 12 mark also. The application, the how you link the answer to the case study is important. So social objective is one non-financial objective, like social welfare. Personal satisfaction is another one, like people just they do business because they don't want to be their own boss. Personal satisfaction, they will satisfy by doing something by their own. And some people want challenge actually. So challenge, accepting challenge, and they want to give some fight. So life is a challenge. They're taking the challenge and they want to negotiate, like, so that's another non-financial objective, like challenging other, like when you're starting a business, it's a challenge like that. So you want to find some challenge in time, because when you're doing a job, it's not challenging that much. But when you're doing a business, you can see how much it's challenging for you, like sometimes financially, non-financially, emotionally, so many. And finally, independence and control. So you want to keep the control with you, like independent, be your own boss, keep the control. That's why some people want to start their own businesses, right? An object should be smart also. What smart stand for is given here. The specific qualities of objective. They are specific, measurable, achievable, realistic, and time bounded. And objectives change time to time because of these reasons. Objectives are always not static, it's not stable. Always objectives can change. It's dynamic based on the circumstances. For example, if last year, if you actually have objective to earn profit this year, so now you can't earn profit because of the pandemic, you have to close the business because of the country lockdown. But next year, then this year that you can have objective to survive, right? Not to lose things. So not to earn profit, but to survive. Like that, market conditions give you some time to think about it. And sometimes technology, sometimes because of the technology, you have to rethink about the objectives because of the technology change time to time. Performance is another thing, and legislation changing because of the you have to change the objectives. Right. These are the main reasons why, and also finally, internal reasons are there. That can be sometimes your family. It can be because of some internal, sometimes like some personal problems, sometimes your health condition, something like that. So because of that, objectives can be changed time to time. Right. When you're moving into other one, the type of business organizations, the important session, sole trader, partnership, social enterprise, and franchise. Here we talk about the talking like 4 different types of business organizations in the private sector. First one is a sole trader. The sole trader, I go through again. The sole trader also another entrepreneur. Entrepreneurs are innovators, like someone who introduces new ideas, who taking risks and introducing new things. So entrepreneurs doing 4 roles: decision making, innovating, organizing, and risk taking. We call it DO. This entrepreneur roles and everything is there. Sometimes in examination, this entrepreneur roles are there checking. So and this important 2 definition: what is unincorporated and what is incorporated. these two definitions: unincorporated and incorporated. Unincorporated means you don't have any, right, the relation, like, separation between you and the business, like the business and you is one person. That businesses like sole traders and partnership mean unincorporated. There is no legal difference or no legal personality, but incorporated is totally different, where you get the status, legal status for a business, and therefore owner is separate and the business is a separate entity, tax paying entity. So therefore, unincorporated businesses, they don't need to pay any tax for a business. Instead of that, owner has to pay the income tax. If you're sole trader, you have to pay the income tax. If you're a partner, you have to pay the income tax for your personal income, for the personal wealth you earn from the your sources. But incorporated businesses like private limited companies and public limited companies, the companies has to pay corporate tax to the government, their tax as a, because legal person, because the shareholders, they don't need to pay the taxes, they have to pay their personal income tax like usual person. So incorporated business have a separate legal identity, therefore they pay corporate tax. Unincorporated businesses, they are not paying any, they don't have any legal identities, therefore those businesses don't need to pay any corporate tax or business tax. Instead of that, these owners paying the income tax, right? And other two concepts you can see, the limited liability, unlimited liability, that concept also. Before go to that, let's go to some check about the sole trader. You can see sole trader is a person, business owner, business owned by a single person. Main features of a sole trader is a unincorporated and unlimited liability. But owners are have the keeps all the profit, and they are independent, simple to start, flexible, and can afford like personal services because they're small and may qualified for government help. However, the sole traders have disadvantages, like they have unlimited liability. You can say they have difficulty of raising finance, and then independence may be too much of a responsibility, long hours and hard working, usually too small to exploit economies of scale. They can't have the benefits of like discounts, and then no continuation after the death of the owner. Like these problems are there. But keep in mind, these are the two, at least should know two advantages and two disadvantages, because the 9-mark structure, you should write two advantages and two disadvantages. Even 12-mark also like that, you should write two advantages and two disadvantages. So the difference between 9-mark and 12-mark, 9-marker you have to write two advantage, two disadvantage, but 12-marker you have to start the answer with the definition, and you need a conclusion as well with the 12-marker. But 9-marker no need a conclusion and no need a definition also, right? So when you're going to other methods, partnership you can see is a business organization between 2 and 20 people. 2 to 20, maximum 20 level is there in the capacity. Especially like a professional partnerships, you can see like accountants, doctors, estate agents, solicitors, etc. So they have a partnership deed, normally we call agreement, deed of partnership, the binding legal document which states that their rights as the partners, like all these factors like how much they contribute to the capital, profit sharing ratio, ending procedures, and how to introduce the new partner, and like their salaries, their interest on capital, interest on drawing, such these terms and conditions, they are mainly mentioned that the binding legal document. So because if you have verbal agreement, sometimes people can forget it. Therefore, best thing is to have a legal agreement in writing. So the good and bad side of partnership. Partnership also, they have, you can say, easy to start, you can say. Legal formalities, so they have no formalities, and partners can specialize in the area of expertise, and job of running a business is shared. You can see like you don't need to take the entire responsibility, responsibilities can be shared, and also more capital can be raised because 200 people who can join, and financial information is not published. These are the advantages. However, points you can see, disadvantage of partners, they have unlimited liability, profit has to be shared, and sometimes they have had this disagreement, and always they fall out and we call friction between partner, and they are legally binding everyone. So decisions, one person decision will binding everyone. And finally, partners still tend to be small business. So here also I'm recommending for you like to know basically two advantages and two disadvantages of the partnership. Right. And we are going to they separate like exception case called limited partnership. Some partnership they have a limited status. So that is UK at limited partnership where some partners contribute to capital and then enjoy a profit share, but do not take part in business. So they have a limited liability status of these partners, and at least one partner has to take a unlimited liability. That is the new concept of partnership. Now some new partnerships are limited partnerships are coming, but general partnerships are unlimited liability, but there is an exception that limited partnerships also there, right? That also keep in mind. That is in the UK. That's new acts are there. So even if you wish to join a partnership but without unlimited liability, so this is the situation. This is a chance to go for a limited partnership. Okay, now we're moving on to third level of the business organization, the franchise business. Like everyone, very the famous, I think, fast food franchises are very common everywhere, like Pizza Hut, to McDonald's, to Burger King, to Domino's, to everything, right? So tacos, everything. So franchise definition, you can see there are two parties mainly involved: franchisor and franchisee. Franchisor is the person who gives the rights to the franchisee, person who owns the original business. Franchisor, he gives the rights like a license, like his recipes and his like business model to someone, like renting out. So what is the rent? It's called royalty. So royalty means you have to pay from whatever the sales you made, you have to give some 10% or 15% of the value of the sales you have to share it with the franchisor. That's the agreement initially. So what they offer, just go through the things they offer is there, like name, trademark, location, authority, and the recipes, training, technology, so and so. And in return, they are taking like startup costs, ongoing fee, contribution on thing, and the merchandise, equipment, everything. So these two parties, like a franchisor and franchisee, they have separate benefits. So if you think about, sometimes question can be asked, what are the benefits of to a franchisor? So these two tables you can see benefits to franchisee, the person who bought the franchise business called franchisee. Just go through, you can find out the advantage like low risk of business failure because tried and tested, and backup support is given. But however, you can say profit is shared with the franchisor and strict contract has to be signed. Lack of independence. So many points are there. At least here also, you should know at least 2 points to write in given situation case study. And franchisor point of view, like the person, like a authority person. So there you can see this method actually a fast method of growth and cheaper method of growth, and take a huge risk. And franchisee take a risk of the business, and franchisor disadvantage, you can see potential profit sharing with another person, and they can damage the reputation by selling inferior products. And sometimes they might get this merchandise and out supply from elsewhere. So these things are normally disadvantages for a franchise and franchisee, like McDonald's fast food franchise. This is really important to know what is the franchise model and franchisee model, right? This is the third type of business organization. So today, now we are going to the fourth level of business, like social enterprises. Social enterprises is like a clubs and societies, like main objectives I told you is the environmental and human well-being. So like charities, for example, these definitions and everything, this was there. And like if you check last like mock exams and other past papers, social enterprise questions are there in certain papers. So it's a definition is important, human and environmental. So both terms, human or environmental well-being. So how they earn money is there, like they have here, these features are these things, they are accountable, they have clear environmental goal, and they earn money, by mainly donations, and sometimes some events like, musical events, and sometimes concerts, and sometimes, cake selling and everything, right? So this is a good business organization. They have a lot of positive externalities like save the children. It can be like Red Cross, UNICEF, like that. Okay, that's the first part of the business, like, the three lessons we down right now. So we're going to the next part, the bigger level, like a small business is over. Now we are going to large business scales. In large business scales, we're starting from the limited companies and multinationals, like limited company and multinational definitely comes under large business paper. or yeah, second part of the paper called large businesses. The large businesses, they have a huge capital base, and the employees are normally more than 250 employees. You can see like the small business mean up to 50 workers. If you have more than like 250 workers, like that is categorized as a large business. So large business organization, number one is a limited company. So limited companies, there are two different companies like private limited and the public limited companies. Private limited means the family owned private businesses. Public limited mean like companies which operate in stock exchange or share market. The main features of a limited company, you can see limited liability they have, and then business they raise capital by selling shares, and they have shareholders and directors to control, and then they have to pay tax, like corporate tax from their profit, like not like sole traders, they are not paying tax, no, they are paying income tax, but here they are paying corporate tax, and then legal procedures are there. When you're forming a limited company, they're giving how to start the company, like how to obtain the certificate of incorporation, like birth certificate. You have to give two documents we call AOA and MOA, right? MOA stands for Memorandum of Association, which comes the company details like name, address, telephone numbers, and all the objectives, everything. And AOA is mean like your statutory, like your legal procedures you like to follow, like your mainly how much your rights of the shareholders, how to appoint directors, the time the office, how long you can serve as a director, and timing of the company meeting arrangement, everything like the legal proceedings are there under articles of association. And the first private limited company, you can see the definition is there. Private limited company is a small medium-sized business, mainly you can see business organization limited by shares owned by family, or like a small can be actually have like a one person also can start a private limited company. So there is a minimum limit is one, maximum there is no limit, normally unless it's a PLC can have unlimited number of shareholders, but at least minimum two. But private limited company minimum one, and unlimited partners, shareholders. You can see whatever the features, you can see business name and with the limited LTD name, and shares can be transferred privately and without using stock market in private company I'm talking. And it's owned by family or friends, like family members, like close friends, and directors like tend to be the shareholders. So main good and bad here also you should know at least two good and two bads of private companies, like they have a limited liability, more capital can be raised, control cannot be lost to outsiders, because PLC you have that disadvantage because you are losing control to outsiders, but here private company are not losing the control to outsiders. And how a disadvantage of private company, you can see financial information has to be made public, and it takes some time and cost, and like rules and regulations apply when you set up the business. Profits has to be shared, have to pay corporate tax, everything. These are the main thing like of disadvantage of private limited companies. And the other company level, you can see the public limited companies, PLC level, it's a limited company type, superior than the private companies. Public mean they are selling their shares in the stock exchange. Every country have a stock exchange, like New York Stock Exchange, Colombo Stock Exchange, London Stock Exchange, Beijing Stock Exchange, like that. So stock exchange means a place that you can go and register, and you can sell the shares. You can earn a large amount of money from the shareholders. So we call the procedure, we call going public. Going public is expensive because of these things. You have to make a document called prospectus, like you have to invite people to invest in your business, right? And you have to circulate it. Bankers you have to find out. Company has to insure the, they call like underwriting, like lawyers you have to find. So legal charges are there, share market charges are there, taxes are there. Therefore, you have to, it's very expensive. In UK, you have to like a minimum. You have to PLC must have minimum £50,000 capital in the UK in order to qualify to become a PLC. That means you have minimum capital requirement is there. That is Sri Lankan rupees about 75 million rupees. So and mainly advantage of part limited public limited company PLC level, is large amount of money can be raised, and they have a limited liability. That's a common thing. Limited liability is common to all private companies, public company. And other thing is exploit economies of scale, because the larger companies, they can have this bulk purchase discount and managerial and technological benefits and everything. And shares can be easily bought and sold. This thing, and high profile in the media. However, points, at least 2 points you have to memorize. Like setup cost will be expensive. With the going public is expensive. Therefore, setup cost is expensive. Risk of losing control, because outsiders can take the control of buying shares, like regulatory control. These things are there. Financial information you have to publish in annual reports and quarterly. 3 months you have to publish your financial performance. So therefore it's a little risky, right? And we're going to the next biggest business level, that is a multinational. So MNCs mean, definition, a large business with significant production or service operations at least 2 different countries. So MNC definition is there: large business with significant production or service operations in at least 2 different countries. So main features of these things: huge asset base, high qualified professionals, powerful advertising, highly advanced technology, highly influenced in both economically and politically. This is the multinational features, like you can see Unilever, Nestle, and Toyota, Ford. These are the biggest multinational companies, and there are some other fashion brands you can see, like Louis Vuitton, like Gucci, Prada, Versace, and like vehicle brands, Ferrari, Toyota, Nissan, Mercedes, BMWs. Like these are the examples of multinational companies which operate in more than one country. And efficiency, control is in host country. So we call host and guest. The country which is located, it's a headquarters, we call host country. And the country it is actually currently operating, it's called the guest country. So what they're doing mainly, operating and sending back the profit to the host country, the parent country. So that's how this business operates in worldwide. Like it's like a business is a huge, business setup, well organized with huge, capacity. So that's the end of our 4th lesson. Yeah. So we talk about the sole trader to multinational level. Now we're going to another important part, like a government-owned business. Some people actually mess up with the public corporation, the public companies. They mess up these 2 points. PLC is private sector company, but public corporations are not private sector. This is government business. Public's name, they are in 2 situations: public limited companies and public corporations. So don't confuse this, because in practice I know a lot of people, they confuse these the 2 key terms: public corporations and public limited companies. These are 2 different, right? Public corporation, the word corporation means given for normally for government business organizations, like a public corporation especially. So these are normally with the mainly to helping people to welfare. Main objective is not the profit, but the productivity and welfare. Sometimes like emergency services, like fire brigades, and sometimes education services, universities, sometimes hospitals, and some countries, we don't have enough private sector participation. So government, they have set up some businesses, and they call it private sector, like a water, like water and drainage system, like water supply, electricity, power and energy, like that. The main features of these companies are state-owned, created by law, and incorporation status, like state funded from treasury, government funding is there, providing public service and public accountability. Normally, these are headed by ministers, like chairmen and ministers, government bodies. You can see UK and all, like railway, right? Public railway system, and NHS, national hospitals. So it's a good example of public corporations. So you know the features, and then what mainly reasons why public businesses are there, like to avoid wasteful duplication. Sometimes electricity, railway, everything very expensive to set up those businesses. So government can do it and maintain strategic industries, like as I told you, power and energy, national security, hospitals, and so on. And also to save jobs, to provide job opportunities. Not like private sector can't give every job opportunity. The public sector must be there to give government jobs and fill the gaps left by private sector, and serve unprofitable regions. These are the main reasons of public sector organizations. Reasons again, some people argue that public sector or government must not participate like a business. They should be like a watchdog, like giving some rules and regulation and everything. But these are the reasons why they say it's cost to the government, extra cost. And inefficiencies are there sometimes. So many public corporations, not like public private sector, because they don't have a lack of motivation to earn profit, and their salaries, everything, motivation level is very low. Therefore, they don't have motivation to actually like private sector. If inefficiency we can see, and political interference is very high always. Like political leaders, they're influencing, they are sometimes for employment, they're putting their people to the organization, and sometimes they are selling, giving their chits and letters and everything to influence the decisions. So these things are having like corruption and everything. We can see in so many developing countries, we can see these qualities, and also difficult to control sometimes. Yeah, so private, not like private sector, public sector, sometimes difficult to control. And then privatization concept also we discussed, like why they have to like government or business organization, they convert to give it to private sector. They are selling it, sometimes they are deregulation, sometimes they do contracting out, and then sale of land and property. These are the main methods. Just go through, right? Mainly we are mainly this focusing on third term, but first term we are just glancing. And privatization can take place like to generate income to the government, to reduce inefficiency to private sector, and then to result of deregulation, reduce political interference. These are the
Sir?
Yes.
So how do public corporations reduce inefficiency in the public sector?
Private public corporations actually they have, I told you, public corporations, they have inefficiencies are there. If you give it to private sector, we can reduce these inefficiencies, like something like railway system. Sometimes we can see some delay because public sector, they have some delays in railway. They are not thinking about the punctuality. So if you give it to private sector, so private sector people will work with efficiency, so we can reduce the delay, and customer service and everything we can increase. So we can see the service given by the private sector hospital and the public sector hospital, the private transport system and the public transport system. We can see there's a clear difference between the efficiency wise. That's why this is a common arguments for, but mainly this privatization and these concepts are mainly targeting, right? At the end, like mock examination, and the like mainly like a big exams at the end, like final exams. But here we are going to do like this is not like a final exam. This is like a term examination. So mainly we are targeting marketing, human resource, and other things. That's why today this whole purpose of this revision program, just to actually refresh our business foundation model, that we are topics that we learn in first term, we are going to just revising. So, and you can see the next lesson we talk about is the different forms of ownership and everything, that we are going to do it in another time. We discussed this topic, business classifications. We classify the business like primary, secondary, tertiary, and quaternary. Primary sectors mean agriculture, right? Fishing, farming, fishing, agriculture, quarrying, and mining. We call primary sector businesses. You should know how to classify a business organization, which sector it comes from. Secondary sector means like when you are involving conversion of raw materials into finished or semi-finished goods. We call that secondary sector, like construction, assembly lines, like factories. We call bottling factories, biscuit factories. This coming under secondary sector. Tertiary sector means service providing organizations, like production of services in the economy. That's commercial services, financial services, household. These are commercial tertiary sectors. So there's interrelationship between these companies. Primary sector, for example, if we talk about the bakery, like the flour they're producing, the field farmers, they're producing the corn and everything, and then factories, they are making into the corn, they can converting like a corn flour, and then wheat flour, and after that they're processing in the secondary, in the factories, processing like a baking breads, and then they are selling it the bakery in the showrooms and restaurants. So bakery products, that's a tertiary sector. Like that, always is interrelated. Always is interrelated. Like a fishing, also same. Fishermen going to sea and then catching fish. and making, in the restaurant they're making that thing. So manufacturing part or canning it is a different process. Processing the secondary sector, and selling food is a tertiary sector, like that. They have interdependence is there, and then changes are there always. Business sectors are changing time to time. The agriculture contribution going down. You can see time to time. And the tertiary sector involvement is going up. We can see like it's 1950s tertiary sector only 32%, but now 74%. You can see how tertiary, the service sector, a lot of people will involve in the service sector because it's easier to do this business than primary. Look at the primary, it's 24 gone down to 1.5. Secondary sector also gone down, like 42 become 24. Deindustrialization. So these things are their new trends. So that's why these trends are important, the business levels and business changes. Right. We didn't discuss location. Location we are doing like in the future, like during mock exam times. Then after the location decision in the primary, this first term we discussed this lesson is the even globalization topic courses like that. Globalization topic also we are doing during mock exam. And after globalization, we mainly discuss is the last topic, the measuring success in business. Measuring success in business, we discussed that in page number 108. You can see how to measure the success in business. What are the measurements of business success? So this is the final lesson in first term that we discuss under business success. Why business will success? What are the yardstick? What are the measures of judging success of a business organization? So mainly in the introduction part, we have given these measures like revenue, like a market share, customer satisfaction, profit, growth, owner satisfaction, employee satisfaction. These are the indicators that business is successful. If a given business, if it is a small business or a large business, if they ask a question, analyze two factors or analyze, explain one factor. What is the, so whatever the factor with judging success, you have to say, yes, factors of judging success are these things. Revenue, you can see the revenue increase from this year to this year. Therefore, we can judge this business was successful. Like that, this judging success, the pillars are really important. These things like we can say by analyzing 2 years or by analyzing some facts and figures, measuring success by revenue. If revenue increase from time to time, we can say business is okay, doing good. But revenue decreasing, we can say the business not doing very well, right? And market share, the number of customers that you have is indicator of success. If you increase the number of customers, that indicates how much you have the customers in the business, which means indicator of success. Customer satisfaction, how much they are, sometimes they are social media, the feedback. You can see some hotels and everything. We have a trip advice, some feedbacks, comments are there by the people. This customer satisfaction is important. That gives some kind of indication the business is okay, good. And profit and the growth. These things also indicate the success, profitability, the growth are measures of success. And sometimes awards and rewards that you have in a business organization is a measure of success. We discussed these things. Owner's person satisfaction is a measure of success. If owner happy about the thing that they attain at the end, so that's called a measure of success. Shareholder success, sometimes if you get a good dividend for shareholders, you can see the business is a successful business. Like that, these are the number, like a material factors. And employee satisfaction, like non-material, like sometimes employees feel happy, they work hard, motivate. So these employees feel good, this is a good place to work. So this makes the business more profitable. On the other side is important. So employee satisfaction also measure of judging success. And imports of targets in judging success is important. Talk about this when if you accomplish some target and you achieve that target. Imagine you have a target to achieve a 10 million profit and you achieve it. That means you are successful, like that. That is really important. Even small business or large business, the judging success is really important. So these are the main things that we discuss actually in the first session. So business reason for failure also we are normally talking during the mock examination. In another session, I'm going to cover this part, business failure and everything we discuss during the mock examination time. Okay, so that's cover the entire first term stuff we talk about under business studies, the first term revision, right?